Chapter 2, Part 1. I'm going to go over the value chain and the income statement. Now, this class is all about the words. Just like debits and credits are part of the language of financial accounting, this chapter is all about the language of managerial accounting. We go over these in Part 2. The category of the cost determines how to use it when analyzing costs for managerial decisions. So please make sure you understand the meaning so you'll be successful understanding the rest of the chapter. So spend time on understanding this terminology. So we're going to go through all these categories. We're going to cover types of businesses, the value chain, types of costs, categories of inventory, and overhead. Now, for types of businesses, we first have the service business, which sells intangible assets, like healthcare insurance. They have no inventory and they have no cost of goods sold. Then you have merchandising companies. They resell finished tangible products bought from manufacturers and suppliers. Such as Walmart, they carry substantial amount of inventory and have an expense account called cost of goods sold. Then we have manufacturing companies. These use labor, plant, and equipment to convert raw materials into finished goods. They have a very different inventory. It's further broken down into raw materials, work in process, and finished goods. This is the type of business we focus on, manufacturing and analyzing those costs. Now, the only difference relates to how inventory is shown in the current asset section. For service companies, there is no inventory. For merchandising companies, they only show one account called merchandise inventory. And for manufacturing companies, they show raw materials, work in process, and finished goods. The value chain. This is what happens for a product to be produced. First, they have to do research and development. They have to design it. They have to make it. They have to market it. They have to distribute it. And then they have to service it. Now, first we're going to talk about cost categories. So the first we have, and we're talking about a company that manufactures goods, is we have what we call direct costs. These are costs that can be traced directly to the cost objective. So for an example, the cost objective would be making a dress, and the direct cost would be the fabric, the buttons, and the labor, which are directly associated with it. Indirect costs. These are costs that relate to the project but can't be traced specifically to one item. These are jointly used among several cost objectives. Examples would be the plant and equipment depreciation, a supervisor's salary, and utilities. These would all be considered indirect costs. Now, how do we assign them? Well, trace. We trace direct costs to the cost objective. The amount of cost assigned to the cost objective is very precise, like how much fabric used to make a dress. We allocate costs associated with the product that we can't directly assign to the product, and we do this via an allocation which we call overhead. Now, let's clarify and let's take a look at how we would categorize these items. So first we have the dress department sales clerk salaries. That would be direct. The cost of clothing sold would be direct. The cost of the hangers would be indirect. Electricity for the building would be indirect. The cost of radio advertising would be indirect. The clothing buyer's salaries would be indirect. Depreciation in the building would be indirect. The cost of the bags would be indirect. The store manager's salary would be indirect. Cost of the security guard would be indirect, but the dress department's manager would be direct. This is just how we would categorize it. Now, costs for internal decision making. Now remember, we always have to consider the total cost. Must ensure that the price covers all costs plus profit. Costs for external reporting must follow GAAP. Product costs incurred by the manufacturer to produce their products or by merchandise to purchase their products. relates to obtaining inventory. They're treated as an asset until they're sold. Product costs do not get treated as inventory and are immediately expensed. Incurred in other functions of value chain cannot be directly identified to the product. So here's a summary. A manufacturing has total costs that include product costs and period costs. Product costs would include the direct material, the direct labor, and the indirect material labor and other overhead costs connected to the product but can't be assigned directly, and we allocate that. And then we have period costs or operating costs. These are expensed as they incur. That's where we'll talk about overhead later, but that's what we allocate it different ways. It could be labor hours or units. Now, total costs, product costs, and period costs. So, total costs include product costs and period costs. Product costs include inventory that's sold, which goes to cost of goods sold, and anything that's not sold goes to inventory. So remember, inventory is an asset till it's sold, and then it becomes cost of goods sold. Calculating cost of goods sold under a merchandising company. Well, we start with beginning inventory. We get purchases plus freight in, less ending inventory gives you cost of goods sold. So let's take a look at an example. Now we have this small retail company. They have sales, utilities, beginning inventory, ending inventory, along with rent, sales commission, and merchandise purchases of $36,000. So first we want to determine cost of goods sold. We're going to start with our beginning inventory plus our purchases, less ending inventory gives us our cost of goods sold. Sales revenue minus cost of goods sold gives us gross profit, less our operating expenses, and we have net income of $4,400. Now, what if you decide to manufacture the goods instead? Well, now you're going to have three categories. You're going to have the raw materials. These are the materials that are used to manufacture process and are issued to work in process if direct and to overhead if indirect. Work in process, we collect all the costs used to make the product in this account, including direct labor, direct materials, and overhead. Overhead is where we collect the indirect costs and then we apply it to work in process. Finished goods, when we finish an item and it's ready to be sold, we then transfer those costs to finished goods. It's only from finished goods that we can transfer to cost of goods sold in this class. Ending inventory on the balance sheet equals raw materials, work in process, and finished goods. So let's take a look at an example. All right. So, step one, we determine the direct materials used. So we take beginning inventory plus purchases, freight in, and import fees minus ending raw materials gives us direct materials used. Then we're going to determine cost of goods sold. We're going to start with beginning WIP plus direct materials used that are allocated from raw materials plus direct labor plus overhead that's allocated minus ending WIP gives us cost of goods manufactured. This then goes to finished goods. We take plus beginning inventory plus cost of goods manufactured gives you cost of goods available for sale minus finished goods, any inventory gives you cost of goods sold. So that's the process you have to go through. You make the goods. So we'll start here in our example. And first what I like to do when I have a problem like this is in order for me to determine cost of goods sold and to do an income statement, first thing I like to do is categorize my costs. So, beginning raw materials would go under raw materials. Finished goods would go to finished goods. Beginning WIP would go to WIP. Direct labor would go to WIP. Direct materials purchase would go to raw materials. Utilities would be indirect for the plant. Delivery expense would be operating. Sales salaries would be operating. Plant janitorial services would be indirect because they relate to the facility. We'd ignore the sales revenue when categorizing costs because it's not a cost. The rent on the manufacturing plant would be indirect. Customer service hotline would be operating expenses. Now what we're going to do is we're going to go through the process of determining the cost of goods used and cost of goods sold and income statement. So first we determine how much is direct materials used. So we start with our beginning inventory plus purchases minus ending raw materials tells us direct materials used or issued to work in process is $36,000. Then there we start with our beginning WIP plus materials plus direct labor plus overhead, which would have been the utilities plant, the janitorial service, and the rent on the plant. Gives us our total manufacturing costs minus ending work in process tells us how much goes to cost of goods manufactured, which we transfer to finished goods plus beginning inventory minus ending inventory gives us cost of goods sold. Now we have the number that we're going to use in our income statement. So we have our sales, we have our cost of goods sold, gives our gross profit, minus our operating expenses, gives us our net income. Now, what's our ending balance in inventory? It would have been ending raw materials, ending WIP, ending finished goods, gives us total inventory of $15,500. Now we'll go on to part 2.